The Dow pulled a surprise move. Tech looks shaky, but something's brewing under the surface. And if you're not watching this before tomorrow's opening bell, you're flying blind. What happened on Tuesday, April 22nd, in the U.S. stock market isn't just another headline day. It's setting the tone for what could be a breakout or breakdown moment. I'm breaking it all down with zero fluff and giving you a no-nonsense forecast for Wednesday's session. Alright, here's the real story behind the tape. On Tuesday, the Dow Jones Industrial Average finished slightly green, closing up 0.18%, while the S&P 500 slipped just under 0.1%, and the Nasdaq lagged, dropping 0.35%. What's interesting isn't the close, it's the intraday action. Early in the day, we saw a soft open, driven largely by weakness in mega-cap tech stocks. Apple and Microsoft faced profit-taking pressure after last week's run-up, while Tesla once again became the battleground stock, swinging over 4% intraday before settling lower. But don't let the tech weakness distract you. Energy stocks were on the move again, and financials quietly outperformed, signaling a possible rotation brewing. Meanwhile, bond yields crept higher, with the 10-year Treasury pushing closer to 4.65%, keeping pressure on growth names. Investors were clearly caught in two minds. Is this a healthy consolidation, or the start of a pullback? Here are some names that did not follow the script today. ExxonMobil, XOM, and Chevron, CVX, both closed higher on the back of oil pushing past $84 per barrel. Energy is starting to reclaim leadership. Bank of America, BAC, and Wells Fargo, WFC, moved up despite the rising yields, something we haven't seen in sync for weeks. On the flip side, Nvidia, NVDA, saw some weakness after a downgrade from a mid-tier analyst, but the volume was light. Not a panic sell-off, just cautious hands taking some off. Also, keep a close eye on consumer discretionary. Names like Target, TGT, and Home Depot, HD, are showing unusual strength ahead of earnings season. Now, here's where things get real. This morning, we got a look at the PMI numbers, and they came in hotter than expected. That's good news for growth. But bad news if you're hoping for a Fed rate cut anytime soon. Also, Fed Governor Waller made some very pointed comments this afternoon, suggesting rates may need to stay higher for longer to tame sticky inflation in services. That single sentence is going to echo into tomorrow's trading day. Don't forget, tech earnings kick off in full force this week. Meta, reports tomorrow after the bell, and that's going to move not just the stock, but the whole Nasdaq. So what should traders and long-term investors watch for on Wednesday, April 23rd? Here's my read. 1. Watch bond yields. If the 10-year crosses 4.7%, expect another round of selling in tech and growth. But if yields stall or reverse, we could see dip buyers show up in force. 2. Meta earnings reaction after hours. This will be a big tell for all AI-adjacent names and ad tech stocks like Google and Snap. 3. Small cap stocks. The Russell 2000 is quietly setting up a possible breakout. If this index starts moving, it could be the spark for broader risk-on behavior. 4. Look at the VIX. It's still under 18. If it stays suppressed, that signals the market is still in controlled pullback territory, not panic mode. My forecast. Base case, choppy open with possible upside in value stocks and energy. Bullish scenario, if yields drop back and Meta gives a strong guide, Nasdaq could reverse course and lead higher. Bearish scenario, yields keep climbing, Meta disappoints, we break short-term support at 5,000 on the S&P. Don't sleep on what's happening under the surface. This isn't just about earnings or headlines, it's about positioning. Big money is already moving into value and out of hypergrowth. The charts are telling a deeper story. If you're serious about staying ahead of the market, don't just watch, participate. Drop a comment below. Are you buying the dip, or staying on the sidelines until the smoke clears? Like this video if it helped you make sense of today's action. And don't forget to subscribe. We break down the tape every single market day, no noise, just signals.